Now, the global forex brokers company ForexTime is preparing to set up shop in South Africa. The company recently acquired a license to operate in the country. It already has a base in Nigeria. Samitra Naidu caught up with Jamil Ahmad. He's a vice president of corporate development and market research at ForexTime to get his views on Africa's economies, markets and the investment environment. She started, however, by asking him about his views on US President Donald Trump's reformist measures and their impact on the global economy.
Actually, this was something that we were trying to point out at the time, that just because Trump was coming in and because he was talking a big game about how he's going to promote business-friendly policies, the US economy would shoot up, he's going to get 4% growth. But in reality, actions speak a lot louder than words. And what Trump is facing is a lot more hurdles or obstacles towards pushing through his legislative reforms to what was priced into the market. So the dollar's likely topped, at least for now, until we find out whether these tax reforms can really be pushed into reality. Remember what happened with Obamacare? First time round, it didn't go through and people thought it would go through. So maybe tax reforms will not be as simple to push through as people think, which means the stock markets might be at risk. But on a general basis, I think emerging market currencies are completely oversold.
How long do you think that the dollar could remain at these levels or even move lower?
This is one of the risks with a Trump presidency, if you're looking at it from a market perspective, because you never quite know what's next. So what I would say is that the dollar could be at risk for some time. It's still at milestone highs if you look on a historical basis, but over the near-term price action, the dollar is susceptible to weakness. So emerging market currencies are definitely going to be number one for benefits, especially if the bond markets benefit, because when investors buy the international bond markets, they look for a yield. Then the emerging market currencies come into play.
We have the two biggest economies on the continent that are in serious trouble, Nigeria in its worst recession, I think, and South Africa, lots of politics dominating.
One advantage that South Africa does have at this stage is that its currency is undervalued for economic performance. It's political news that's being dominating the rand volatility. And there's a carry trade opportunity. So if the dollar does suffer, or if investors want a high interest rate policy, South Africa will benefit. Now, if we talk about Nigeria, it's going to face more hurdles because oil prices are still depressed. And it's thought that Nigeria need oil roughly around $90. We are very far away from that distance, and we could be for a longer time. So what I believe will happen is that these oil-producing nations, not just Nigeria, will have to keep focusing on diversifying their economy. So that if history does repeat itself in the future, whether this is 10 years' time or whatever, and oil prices do slide, economies can balance on different factors.